Can you hear me when I talk?
Yep.
We can hear you, Raj.
Hello, welcome. Thank you for joining us today. We are once again hosting with Mercury and my friend and colleague, Shelley Golan. We're super excited to have, for the first time, Teddy Blank. And we are going to have a discussion today about the fund. And also, again, we're super excited to continue this Mercury partnership and have really interesting clients and customers of Mercury, which, by the way, we are as well, to discuss with the Family Office Insights community. We can't hear or see you, but we know you're there, and we encourage you to ask questions through the Q&A or the chat box, and we'll get to as many as possible during the session today. We also, we're going to make sure everybody gets in touch with each other post-webinar. We'll be recording this and posting it to the Family Office Insights YouTube channel. And preferably, Teddy, we can have it posted to your website so we can have people go there rather than we don't need to drive traffic to ours. And if there are others that you think would be interested in what you hear today, the recording would be there, and you're welcome to introduce them directly to Teddy and Shelley post-webinar. So again, super excited to be doing this with Mercury. We had a really exciting and interesting session yesterday, and we're going to continue to do this. So again, Shelley, thank you. I'm going to hand it to Shelley real quick, and then and we'll go from there. Shelley, thank you.
Thanks, Arthur. Hi, everyone. Thank you so much for joining. I see a couple of familiar names from yesterday, and I'm really excited about this one specifically. I work on the relationship management team at Mercury. We support founders, VCs, family offices in the ecosystem with banking services, as well as additional opportunities such as this opportunity to connect the exciting clients that we work with, like Teddy's fund, with LPs and interested parties. So happy to talk about how we work with the ecosystem at any point in time, and specifically thrilled about hosting Teddy and First Star VC because they are focused on climate tech, which is a subject close to my heart.
Cool. Thank you for the intro, Shelley. Oh, sorry, Arthur, do you got more?
I forgot I was on mute. Yeah, take it away.
Cool. Thank you so much, everybody, for joining. I've also got Raj here. Raj is one of our current fund LPs. He'll add a bit of perspective in a moment, but I'll give you the very high level on what we're up to. We're currently investing out of and raising our third fund, targeting 30 to 50 million, and the focus is really, pre-seed hard tech, driven by new ways of computing. And I can pull up a slide deck real quick here. And one of the big things that we look for is, and if you saw the first session with Millie, we have a really hardcore focus on working with technical founders and on doing really hard, novel things at the very earliest stages. There's a lot of we're in Boston, we're based in Cambridge, Mass. There's a lot of incredible research and science and new technology being commercialized all around us. And so we do a lot locally, and we do a lot in the rest of the US and North America as well. Actually have a number of Canadian portfolio companies that have been performing really well, but have a North American focus, and really try to stay as close to pre-seed, company founding earliest days as possible. And the way that the new computing kind of approach manifests is, as Shelley mentioned, across a lot of climate tech, a lot of energy and hardware, and novel plant science. We have a lot of biology in the portfolio as well, a lot of industrial automation, and trying to work with founders so we're going after really hard, big, scary problems that are being enabled by this new computing paradigm. And I've got more to say about the team and the fund, et cetera, but I will let Raj just very quickly introduce himself and say a few words about why he decided to invest.
Thank you. Hi, can you guys hear me?
We can hear you.
Can you guys hear me?
Yep.
Oh, hi. I'm Rajiv Surati. I am an investor in the third fund. This is the first time I'm investing in Drew and Millie and Teddy's fund. I've been in the startup business since 1998. I've co-founded and sold 2 companies. I have 2 more. One's profitable, and one is I started about a year ago. That's a national security focused thing on taking alternative. It's an alternative to GPS using visual imaging and 3D models. My PhD is from MIT and I did my undergrad there in electrical engineering and computer science. And I've been investing for many years, and I've probably made 150 angel investments, and those include things like Notion, Lucidchart, Ginkgo Bioworks, and there's a whole host of ones that I've done in the last 4 or 5 years. And I met Drew about 5 years ago. I teach big data at Harvard Medical School to these up and coming doctors about what does it take to actually what can they do when they're ruling the world with big data. And so I basically met him at a bioinformatics event that I think that what I think distinguishes Drew is that he is very technical and very deep, and that I don't find that as much as you talk to these different venture funds. I've probably invested in 6 or 7 of them at the early seed stage, and Drew kind of and I get along very well. We have a lot of discussions about doing a business and the inner being an operator, but also looking at where to place bets in technology. And I invested early in Ginkgo in 2014, but I think now is really a great time to be investing in the synthetic biology space and biomanufacturing. And then Millie I met through Drew, and I think she and Drew complement each other very, very well. I think Millie has a lot of international experience and a lot of corporate contacts, and she has her own sense of what's worth betting on. That's always interesting. And I think in their first fund, they did some really interesting with Sia Coin. And there was a company that they've done some company creation that I participated in, and that's how I met Drew. So I've really gotten to know him quite well, both over the last 4 years working on a company that we invested in, getting to understand how he thinks about things, how he takes challenging situations, how we move people in and out, and getting the companies to do what we need them to do, as well as understanding that, not all the time our company is always going on an upward J-shaped curve. I mean, it's great if they do, and hopefully you get one in your portfolio. But, there's sometimes timing is a big thing, and so patience is important too. And the life of funds is, like 10 years, I think. So it's good to get them going in the first 1 to 3 years really well. But it might happen, in the 3rd year or even the 4th year. But that's going to be a testament to that founder. But having supporting people is important. So anyway, so that's a little about me. I know a lot about instant messaging and networking and web stuff. I ran a really large, one of the first photo sharing websites out there that I sold called Photo.net. And the first company I sold became MSN Messenger. But, back to sort of this investing thing, I think that I've been very impressed with the portfolios they've produced. And when they asked me if I was interested in investing on their 3rd fund, I was more than happy to, just because I know who they are. And I met Teddy. And in any case, I do need to bounce. If you have a question for me, I'm happy to answer them. And if you want to talk to me about them, I'm happy to. And Teddy just joined the firm in the last 3 years, I think. And I've enjoyed working with him. And I think Millie and Drew are enjoying some good, solid work out of him. And in any case, that's my background and that's my thoughts on this.
Cool. Thank you so much, Raj. I know you got a bunch going on and got to run. So please feel free to step away if you got to. But thank you for the kind words.
Thanks.
And for anybody listening, if you are part of the Boston tech community or ecosystem, you do know Raj. He's a mover and a shaker behind the scenes. He's one of the kind of the unsung heroes of the ecosystem. As you heard, has started a couple successful companies, has invested in a number of very successful companies, and he is I'd say he's the profile of LP that we intentionally want to work with, where we want to have a good base of family offices and high net worth folks and founders as well. And I think that's a big part of Drew and Millie and I have all started companies in the past. We've all founded startups, and really see a ton of some of the best referrals or kind of introductions in our network come from founders. I'd say most of them come from other founders. And so trying to have as kind of as powerful a founder network as possible. But as Raj mentioned, Drew and Millie were the two founders of the fund. They started it in 2017. Here's a brief timeline. This is our third fund. We're targeting 30 to 50 million, as I mentioned. And the progression for us has been, it's been really intentional. The last fund Drew and Millie started investing out of in 2017. I joined 2 years later, and we invested over the intended investment period. We didn't get out over our skis in 2020, 2021. We kind of kept a cool head, invested on schedule. We're fundraising on schedule and trying to be really intentional about structuring and administering the fund in a way that's going to let us kind of take the right number of bites at the apple from the right types of vintages. And so happy to talk about any of the kind of historical pieces of the fund, but you can see the big things are Fund 2 launched 2017. I joined a few years ago, and then we had a couple exits in 2023 that I'm happy to chat about a bit as well. But really the thesis, as I mentioned, is this kind of evolutionary edge of computing. And so how does that manifest? It might be, a company like Fido. These guys are out in Sonoma in California, and they grow true super plants. These plants that you can see are aquatic. They grow in the water. That water and the nutrients in that water are provided by the actual wastewater that the cows on that farm, spit out. It goes through a biodigester. They feed these plants. They feed the plants to the cattle. The cattle make more milk with higher milk fat content, less methane emissions. It's a pretty incredible super plant that these guys are cultivating. But the way they actually do it is with the power of compute, automation, machine learning. So you can see there, they actually have, that's an outdated picture. The robot they have now is the second largest agricultural robot in the world. And they run it back and forth over these big ponds of aquatic plants that they're growing. And these plants, because they grow so quickly, they turn over every 24 hours. They have a massive amount of data that they feed into their system that they use to optimize which plants should we harvest, which plants need more nutrients, which plants should be moved around the pool. And that all happens automatically. And so, they're bringing together this kind of, automation, big data, machine learning, AI, computer vision piece with the actual hardware robotics piece. And one of the things we really love about what these guys are doing is they're selling a product. They're not selling a button. They're not selling a piece of technology. They're not selling a connector. They sell organic cattle feed and organic fertilizer. And they do it at software plus margins, actually. And so these guys, we invested in the pre-seed. Founder was an MIT PhD. We met him when he was in Boston. He moved the company to California to go after cattle. But they raised a $15 million Series A last year, led by Google Ventures, and I think represent kind of the profile of company that we really love to work with, which is technical founders doing something really novel and using AI automation to really make it sing and drive high margins. And so that's a Fund 2 company. There's a Fund 3 company. I'll give another example. This one is actually using a bunch of different LLM and generative AI technology to work with large project developers in the US who are building, energy infrastructure and transmission and subsurface projects and mining and natural gas infrastructure. If you're familiar with any of the permitting and process to do any of that in the US, it is a nightmare. It is a potentially 10-year permitting project for someone to stand up, a new geothermal site, for example. And so, that's a problem that comes from being government oriented and having massive amounts of paper data and, environmental review and legal process and all this stuff that goes into it. And it's a really good problem for computers. It's not a good problem for people to run this process and to keep track of every tiny change in every regulatory law and how it flows back through a project's finances, et cetera. And so this is an example of a Fund 3 company that we believe is a really interesting application of generative AI, of LLMs, where the moat that they can build over the long term is you become a critical part of the process for these several $billion projects to actually make it to market. And it could be a 7 to 10 year process. And so really long customer relationships, high average contract value, and a really sticky product that's going after a huge critical real world problem. They're going to unlock infrastructure and energy. And so I bring up those two companies as examples of the types of startups that we really like to work with, and both founded by very technical founders. So one was MIT PhD, the founder of Bloomin, this company I'm showing you right now. He's a recent Stanford graduate from their CS master's program, and it's people who can build things with their hands. And so keep those companies kind of in your mind as representative. A little bit of detail on Fund 2. So this was the previous fund. I'm not sure if Millie shared any of this, but we're proud of the numbers and believe that these are of course any venture fund of course can show you numbers at any given point. It doesn't really matter until it's DPI anyway. And so of course we believe in the portfolio. We believe there'll be a ton of DPI, but happy with the IRR, et cetera. In the meantime, I think one of the things with deep tech is we're not overly stressed about interim markups, interim IRR. These are companies that, as Raj mentioned, are going to be built for the long term, and will provide returns on a venture timescale of a 10-year fund lifecycle. But they don't necessarily look like the software markups of 2020, 2021, and we're fine with that because it's part of why we want to invest in these types of startups is they can do a lot without getting messed up in kind of the call it the overcapitalized world of what we've seen from a lot of SaaS in the past. So happy to talk about. Yeah,
this
go ahead.
Might be a good time if it's okay, because I've read a bunch of your information, and maybe you can comment on how your approach as a VC is different than what we've seen in the past of, flush 80% of the companies and hope that 10 are unicorns.
Yeah, and I think there's still, like any venture fund, there's still likely to be a pretty barbelled set of outcomes in the portfolio where we'll have a bunch of massive wins and we'll have a bunch of companies that go to zero. One of the things about deep tech, kind of hard tech, and we've seen this in our own portfolio, is companies get acquired and have exits all the time, even without reaching kind of call it meaningful commercial traction or kind of escape velocity. And there's a company in the portfolio, actually, that's a really good example. There's a company called Ort that was a Fund 2 company. They, in late 2019, Matt, the founder, had left Cisco. He walked into our office. He knew Drew because Drew's a technologist and had been working with folks from very early stage. And someone said, hey, if you're thinking about starting a company, you should go talk to Drew. He's an engineer. He knows what he's doing. So Matt came to our office. Drew and I sat down with him, and we started to sketch out, this kind of edge security product that he wanted to build for enterprise, edge cybersecurity AI product, and work through what that might look like. We, led his pre-seed, and the belief was Matt is a really strong CEO. He's a really strong technologist. He knows how to get a product to market, and he spent 3 years really hardcore building a meaningfully, robust product. Cybersecurity is a big deal. It's kind of a high consequence area. He built a roster of CISOs who were strategic advisors, who were pilot customers, who weren't paying much, but they were giving feedback on the product, getting really excited about what he was building. And Matt, he spent 3 years basically building the first version of the product to be really robust, to work in an enterprise setting. And he hadn't really turned on the revenue anything. He had maybe a couple $100K in sales, and Cisco came in and bought the company for $100 million, 6 months ago. And it was a thing where Matt had built a piece of technology that was really hard to assail, that was really meaningful, that was really valuable. And even without having gone and built a massive kind of customer base behind it, a customer saw the value in it and wanted to own it for themselves and bought Matt and the tech, but bought it for a really big number. They'd raised a Series A at 30 million, I think, less than a year previously. And so got a really great acquisition out of it that was mostly based on the technology that Matt had built over the past few years. They weren't buying customers and they weren't buying revenue. And so that's an interesting thing. I think that's a little bit different about the hard tech piece of it is you can build a ton of value and you can realize a ton of value without having to go and be tied to revenue multiples or growth rates or anything like this, because it's a slightly different lens on what's a what makes a valuable company at the very early stages versus later on. Obviously, all these companies will one day have many hundreds of millions in revenue, but in the meantime, there's more to chew on there, if that makes sense.
Yeah, totally. That's super helpful. Do you want to take a quick question? Only because
Please.
we always end up running out of time. But there's a question, any dual use technologies? Speaking of deep tech, any investment in semiconductor startups?
Yeah, definitely. So we have a couple of chip companies in the portfolio. One is called Gradient. They are making chips for really high consequence energy applications. So a lot of oil and gas and energy infrastructure customers use them. Dual use, I'm going to guess that's kind of a question about potentially military or other. We haven't intentionally gone after dual use startups. I think there's a ton of folks out there who are building really interesting tech that has DoD as an early customer and can kind of get some early traction there. It hasn't been an intentional thing for us yet, but we definitely are seeing much more appetite from DoD and other government, and honestly DOE too, to buy and participate and try things earlier. But it's a good question, because a lot of the hard tech stuff manifests as, hey, there's potentially a government customer here at some point.
Yeah, super helpful. Thank you.
And this is a high level on the team. So it's as Raj mentioned, Drew and Millie started the fund, and I joined in 2019. But Drew has been a CTO, founder, VP engineering for a really long time. He has had a few big outcomes for companies he worked for and founded. Semantic Machines was the original, kind of one of the original NLP companies that Microsoft bought before they ever came out of stealth, to be the backbone of their Cortana voice system a few years ago. And Drew ran the engineering team there. He ran the engineering team at Endeca also, which was bought by Oracle for $1 billion. And actually, the Endeca Mafia is a real thing in Boston. There's a bunch of really great, high growth, successful startups started by Endeca graduates, including Drew. He started his own company, Locately, had a great exit for that one. But Drew's someone who I met him. I met him in 2019. And again, he's kind of under the radar, and I hadn't come across him a ton. And then once I started getting to know him, it became clear that he's someone who, and this is a big reason why I joined the fund, is he's someone who really knows how to make money. Like everywhere he's been in the past, he's had big outcomes. He's gotten liquid. I think he's someone I'd like to be around going forward, just because I think he's got a good nose for how to get cash. And he's also first call for any technical founder in Boston. They really like that Drew can sit down with them, and he writes code on a Linux machine every day still. And he can sit down and walk through really complex technical systems with founders. And Drew went to Harvard undergrad as well. Millie is the other founding partner of the team. She is also a co-founder in the past. She actually co-founded a startup that is now the biggest computer vision medical imaging startup in the world, Infravision. She is on the advisory board at MIT CSAIL, and Millie is, if you need to get to anybody in the world, Millie's probably at most a step and a half away. It's the number of times we've been sitting in the office, and she'll walk into the office from a lunch and put her bag down the chair and be like, okay, this doesn't leave this room, but like I have incredible information that I've learned because I know these people. And so she's a fantastic connector. She has a deep industrial background as well. Works a lot with the startups that we work with who have hardcore supply chain challenges and manufacturing and engineering challenges. And I think Drew and Millie complement each other really well, to the point where when I joined the team, I think it was kind of the only missing piece of this kind of go-to-market expertise. So I had worked with startups, co-founded a startup in the past, and really my focus historically had been on go-to-market and business development. How do we get your first 10 customers? How do we make them successful? And how do we tell the story the right way to get you money in the bank from customers? And so we're a lean team. We all do kind of everything. I think there's no like Drew's deals, Millie's deals, Teddy's deals. It's a fund-wide effort, firm-wide effort. And we really love the team we have in the room. I think we trust each other. We believe in each other. There's never, I don't worry about Drew and Millie ever. And I don't think they worry about me. So there's a little more detail on those guys. Can send this afterward as well. One of the things that we do that's slightly different as well is we have done co-creations in the past. And so we've actually done incubations of new startups within the firm. This is a good example, Salient. So right before I joined First Star in 2019, I got an email from Drew. I actually hadn't even started at the firm yet. I had signed my offer letter. I was going to start in a month. And Drew emailed me and said, hey, I know it's early, but like just met these guys, these researchers out of Woods Hole Oceanographic Institute down in Cape Cod who have potentially some like groundbreaking new weather forecasting technology. Thinking about maybe starting a company about it. Would you want to go down and meet them and kick off the process? And so I kind of withdrew. We went down to Woods Hole and we met these founders and said, hey, it was a venture partner of ours who had met them and said, hey, you guys should really check this out. As we went down and talked to Ray and Sam, who are the researchers who are out of Woods Hole and MIT, who had been doing this research, and they had discovered a novel way to forecast long-range weather, so 2 to 52 weeks out, which has historically been worse than a coin flip to forecast, using some really interesting novel machine learning methods and some novel data sources, including ocean surface salinity. They had built a fantastic forecasting engine. And so we said, hey, first of all, we're going to validate that the tech is as good as it seems, and it was, and that much meaningfully better than anything else out there. We spent a few months kind of going and talking to potential customers, validating markets for this stuff. And we came back to Ray and Sam and said, hey, we want to start a company with you. And they said, great, neither of us wants to be CEO. We said, that's fine. We'll get you a CEO. In the meantime, come work with us. And so we co-created the company with them. I kind of ran the company as like interim CEO for the first year-ish. We brought them from research and science to technology to product to company, helped them sign their first customer, make their first couple hires, and in the background ran a CEO search, brought in a fantastic CEO. They're now running on their own. They went and raised a great $5 million seed round from Wireframe Ventures. They've gotten actually quite a bit of non-dilutive capital from the Gates Foundation and others to do more research. But working with customers in insurance and agriculture and energy, and have a really, really long tail of kind of big customers to go after with this stuff in the long run. So I bring that up as an example of like, this is the profile of founder we meet a lot of, especially around Boston, is like really, really intense technologists who are demonstrably the best in the world at what they're doing and may not have, the commercial muscle to go and make something huge. And so when we meet founders who do have that, technical background and that we believe can sell, that's a pretty easy call for us then to say, hey, if we believe in the market and the founder and they have this really well-rounded approach, like that's a good fit. And it's rare. It's much more often that the technologist has a really hardcore technology expertise and doesn't have the market sense. And so we want to be able to leverage kind of our experience as Drew and Millie and I have all started companies, working with founders to help them bring this stuff to market. So we did Salient in the last fund. I think we'll probably do one per fund because it's not something we want to cohortize. We want to take a really, really big swing, and get really meaningful ownership for fantastic price. And so just this is the context of in 2020, when we incorporated the company, we led the pre-seed round at 1.5 million post money, which is for any, that's kind of an unachievable thing if you're going out and just meeting startups in the market. And so we have not invested that much in the company from an absolute dollar amount, but even now that they've gone and raised $5 million and a bunch of grants and other money and stuff, we're still the largest shareholder in the company without having put out that much capital. So it's a structure that worked really well. We're in a location in the world that is a really good swimming pool to try to do this stuff in. And so we'd like to do one in Fund 3 as well, and constantly trying to meet, kind of scientists and researchers and see where the fit might be. I'll skip over a couple of these other timelines of companies we backed that kind of go from really early research and development, exciting technology to meaningful commercial traction, downstream fundraisers, all that kind of stuff. But because we do have a pre-seed focus, I think this is a meaningful slide to show. Even especially over the past few years when prices went crazy at the early stage, we've been really intentional about sticking to our knitting and doing true pre-seed and seed rounds that are fairly priced, that we believe are, there's alpha there because it's something that is, if it's reasonably priced, it means that somebody's not seeing something And so we try to spend time where other folks aren't seeing things. And I think this is just a good proof point of, hey, we kept a cool head the past few years, in the midst of a kind of crazy early stage market. We, as I mentioned, we're Boston located. There's an insane amount of research and technology talent within 20 miles of where I'm sitting right now. And it's, we just got the ARPA H, which is the ARPA Systems Healthcare Research Division. They just launched a new hub in Boston. We have one of the hubs of the Activate Fellowship here. Obviously, Harvard and MIT are doing incredible research. One note just for folks who have kids in the crowd, I have been really, really impressed with Northeastern University over the past 5+ years. They don't get as much shine as Harvard and MIT and Tufts, but they are. I think actually that maybe they might now because their acceptance rate is like really low, maybe lower than Harvard's, but they do a co-op program where instead of full class every semester, it's you do a semester class and you do a semester where you go work in the real world. And there are a ton of Northeastern kids around the Boston startup ecosystem that are doing meaningful work. And I talked to tons of graduates of MIT and Stanford and Harvard who are like, hey, I want to work for startups or do VC or whatever. And it's a lot of kids who are trying to figure out what they want. But kids I talk to coming out of Northeastern, they know what they like, they know what they don't like, they know what they're good at, they know what they're looking for, they know how to communicate in a professional manner. And so I tell my wife all the time, it's like half a joke, half not. It's like the two schools our kids are allowed to go to are Northeastern and the Colorado School of Mines for the resource challenges we're going to see. But the Northeastern ecosystem is awesome. They have a bunch of startup kind of incubator and accelerator things associated with them as well that I've spent a bunch of time with. I'm part of their IDEA program, which is their entrepreneurship program. But I'm not an alum, so this is not, I'm not trying to send you to my school, but highly recommend checking it out if you got kids.
And they haven't been in the news.
Right. It's as a starting point, like minimal controversy. As I mentioned at the beginning, we've got a bunch of Canadian startups in the portfolio. So Millie went to University of Toronto undergrad. She's a mentor at a number of different accelerators up there. But again, that's an area that has been, we believe underattended by VCs. There's not a really great like angel and early stage layer there, but there's a lot of really impressive engineering and research talent. And just to give you an example of one of these companies, there's a company in Montreal called Nomic Bio that is a portfolio company of ours that we invested in their pre-seed. They ended up going through Y Combinator, ended up raising a bunch of money from Lux Capital. But they're doing high throughput proteomics. And so protein analytics at massive scale for a number of different biology applications. And they started in Montreal. They were, they had their first office there. They have actually set up another office with a bunch of researchers and biologists and lab space in Boston as well. And so we help them set up that Boston office, help them get space, help them recruit. But I think that's it's a good example of like, there's this kind of Northeast corridor, Boston, Toronto, Montreal has a lot of really incredible research. There's starting to be a flywheel spinning between these cities. I mentioned bio. It's a huge piece of what we focus on. We believe that it's the era of bio is upon us and will continue to kind of blow minds over the next 20, 30, 50 years. A lot of that is, of course, due to new ways of computing and new ways of actually doing analytics and high throughput biology. And so this is an interesting way to look at kind of a number of the investments we've made in bio, where the different, call it layers or levels of the biological system come into play, and they all matter for different things. But I'll just give an example. This company at the top, Enzymit, they are using algorithms and biomanufacturing processes to discover and produce novel enzymes to make products, right? And this is another example of a company that makes products, not technology. So Enzymit, their first couple products that they're synthesizing from their enzymes are they have a product that is actually, and there's been some research on this, so I can say it. It's not totally public knowledge yet, but it's a product that you essentially sprinkle on the ground and then you wait 20 minutes and you can do a remote analysis of the hyperspectral imagery of what you see, and you can discover explosives, mines, whatever. It's going to be used to clear a ton of mines, especially in places like Ukraine. And the another application is they're making oligosaccharides, which are a critical piece of making synthetic breast milk, which is kind of a holy grail of synthetic biology. So they're making oligosaccharides, they're making hyaluronic acid for skincare applications. But again, they're selling actual products with venture software plus margins. And so it's this idea that you don't want to give a customer a button or an in-between or a piece of technology to license, just sell the thing and capture the full value of that space. And so again, happy to answer any of the questions about any of the bio folks in here. But we have a huge bio portfolio and we'll do a lot more as well. And this is the piece Shelley mentioned, which is the climate piece. I joined the firm in 2019, started spending a lot of time with energy folks, ocean-oriented folks, climate and hardware and agriculture folks. And it became pretty clear that there was going to be a lot of money to be made in this stuff. And and in fact, it's never an emissions thing for us. We're not investing in this because we believe it's, good for the climate, or we believe that we should all be trying to draw down emissions, which is like, sure, we're investing in this stuff because there's a ton of money to be made. And so we don't write checks to climate tech startups unless their product is 10x better, faster, cheaper, more efficient, whatever it is. It has to make massive dollars and cents sense. Otherwise it's a non-starter. And I will say I think that is something that has worked its way through the VC ecosystem. And it's not, investing in climate is not for impact. It's for returns. And we've seen a ton of excitement, especially downstream capital, follow-on investors and call it more sophisticated follow-on investors too, who are, have private equity vehicles to do project finance for deployments of something like Fido. But this climate space has been huge for us. And a lot of it is about that new computing driving, different pieces of the system. So this is kind of how we see a lot of what's going on in climate. It's this kind of, if you have a military background, you might recognize this. It's a little bit of an OODA loop, which is orient, or I'll give you ours, which is measure, predict, and act, right? So what's actually happening? What do we think will happen? How do we deal with this? How do we do it better? How do we mitigate it? How do we solve the problem? And this loop is all driven by compute and by software and by data at every level. And as an example, this is a portfolio company that is working with aquaculture producers that make, really high margin salmon and other fish. And they actually predict the underwater weather 3 days out. And that just lets you operate your salmon farm a totally different way. There's one farm they worked with in BC, in British Columbia last year, that had a $25 million boost in their top line revenue after using Scoot, like a 30% decrease in fish mortality. And it's a really high value problem that they're using AI and data to solve. I walked you through a little bit Salient. This is the folks doing long range weather forecasting. Again, big data, computing, AI. And then this is another portfolio company that's doing stuff with the subsurface. So this company is discovering novel geothermal energy sources. So geothermal is clean, it's baseload power, which means it's 24/7. It doesn't depend on the wind or the sun. It's zero emissions. And the big bottleneck there is discovering heat sources underground. We can't find geothermal resources from the surface unless we apply these really intense seismic imaging and AI methods. And so I can walk folks through it if they're interested, but the downstream effect of something like what Zanskar is doing with this subsurface kind of discovery is you can actually change the ROE on a geothermal project by 60% and bring up the return on investment by about half. You can cut the timeline in half, which opens up a ton of downstream capital, development capital, et cetera. But these guys are a really exciting company. They're actually out raising Series B right now. We're going to do, and we have pro rata that we've protected in that company. We're going to do an SPV for our LPs to take a direct stake in that company in the next round as well. And that's actually something we do quite consistently. I've done it a bunch. We did it with Ort, with that company that exited recently to Cisco that I mentioned. And I've done it 7 or 8 other times across the portfolio where we have a big pro rata check. We love the company, but the way the fund is structured, it's a small fund. We're not going to write a $7 million follow-on check. Let's work with our LPs, get them a bite at the apple. And I've had a great experience of getting folks who want direct exposure, getting them that direct exposure in a way that works for them.
In this case,
so I know
Teddy,
it's late. Yeah.
is it the local? using this technology to decide to locate the facility near these hotspots, and that just drives the efficiency of creating the
Yeah,
facility.
essentially for geothermal, the big bottleneck and the big cost driver is the uncertainty of what does the underground resource actually look like. And so drilling test wells can cost $2 million per well, and you might hit nothing. It might be a dry well. And so instead of spending a ton of money to acquire a target and then go drill 10 test wells that may not make it, if you can drive the test well failure rate from 85%, which is what it is today, if you can drive that down to 25%, which Zanskar can do and do better, that's where you start to, you flip the economics on their head, and it becomes 2 to 3 times more profitable to build a geothermal power plant than it was previously. And so the idea is geothermal should be accessible in way more places than it is today. The existing geothermal resources were mostly discovered by seeing surface expressions of, hot springs and that type of stuff. And this is to be able to say, hey, we should go be able to put this outside Boston. We should be able to go find a resource in places that it doesn't bubble up from the ground. And they've done they actually have, of all the moats of all the companies in the portfolio have, Zanskar's moat is a literal land moat. They go out and they buy geothermal lease, or they buy geothermal leases on these lands that they identify, and so they get a ton of price arbitrage because they see the heat where nobody else does, and so they can go buy these leases, and it's an unassailable moat in a way that a lot of other companies that aren't buying real assets and defending them have. So it's a fascinating business model.
Super cool. Yeah.
I know we're late towards the end of time. I got through most of the high level stuff I wanted to, but just thank you so much for having me on. I love talking about what we're doing because it's exciting. The founders we work with are insanely capable and driven and optimistic, and it's like I think my friends and family know at this point when I talk about this stuff, it's from my chest. It's we are entering this unbelievably prosperous period, I believe, and a lot of these types of technologies are going to be what drive it.
I happen to agree with you, and I've been the beneficiary of getting to see a lot of things that other people don't see just because of the crossroads that I sit. And even so, my fascination with the way people make money and apply talent is just, humanity is incredible. Like, who would ever think that people make money this way? Like, you wouldn't even consider it, right?
Yeah.
So
I would say that's the beauty of this stuff is like doing this job has made me relentlessly optimistic about the future.
yeah, for sure. Yeah. Yeah, despite all the noise, right?
Exactly. Despite all the noise, it's like
Yeah.
it is mostly noise.
Yeah, exactly. Well, I see it's super fascinating. Just to be courteous to somebody on the call here who met Drew or saw Drew at a BTC Expo in 2022. Are you in that space at all?
We have a couple crypto investments. They are not, we don't invest in tokens or anything like that. Have done a couple kind of crypto infrastructure things. He's a true crypto OG. I mean, like participated in the original Ethereum crowd sale, has had Bitcoin since 2010 or 2011. Drew came into the office every day in 2020. In 2019, Drew came into the office every day and kept telling me, "Hey, Bitcoin's on sale." Bitcoin, when it was at like 6K. Drew would come into the office every day and say, "Hey, Bitcoin's on sale." So that's like an example of like, I think Drew knows how to make money. Like he's been very, very early to a lot of really lucrative crypto things, as like an aside to the other things he's done. So he's for sure a Bitcoiner. He's been in the crypto space for a long time, and I think because of that, we have made perhaps fewer crypto investments than we otherwise might have. Drew has a lot of skepticism. He's got a lot of kind of firsthand experience. And I think it leads to us making fewer crypto investments than we would otherwise, actually.
Yeah. Yeah, and you can hack X and say that you've got an ETF.
Oh, I know. That was pretty good, yeah.
Yeah, that's a nice move. Yeah, the world's an interesting place. Well, this has been super helpful. I'm grateful to Shelley and Mercury and you, Teddy, and by the way, it was clear on our last session with Millie that she's the bright light. I mean, not to diminish your brightness.
No.
She is like super sharp, right?
Yeah. That's the thing is like if I have someone that is like they need to learn about our fund in 10 minutes and like really love it, it's like, hey, talk to Millie. She's been doing this and she's really excited about it and she's really good at it. I would say the one thing about Millie is she is extremely honest. And so if you guys chat with Millie and you want to push her on the stuff that isn't working or that hasn't worked or mistakes we've made, like she would love to talk to you guys about that stuff. We try to be intentional about learning from this stuff, and Millie's a really hardcore about that.
Yeah, super cool. Shelley, you want to wrap things up here, and then we'll just
Sure. I just wanted to, before I do so, I think we have like 5 minutes left. Teddy, if you had any closing slides or anything to kind of wrap your presentation with the fund up before we do outros.
Yeah, I would say it's more of an ask for the people out in the
the
audience.
ask, yeah.
I mean, obviously would love to talk to folks about investing in the fund. But one of the things I've been spending a lot more time on lately, and Zanskar is part of that, is subsurface startups. There's the past decade of the shale revolution has made operating underground vastly cheaper, vastly more efficient. And it's all been going towards oil and gas historically, but we're now starting to do a lot more in the subsurface for climate, for energy, for carbon storage, for resources and minerals. And it's becoming a space that is actually attractive for venture investors because, again, you can do these things. You can automate the job site and the discovery and use AI and automation and kind of all of the beautiful things that the oil and gas industry has built for us over the last decade plus in the shale revolution. The world of operating underground looks vastly different than it did even 3, 4, 5 years ago. And I believe there's a ton of opportunity there. So if you know folks who are building startups in the subsurface, or have connects in that world, or the oil and gas, oil field services world, we've actually been hiring a ton of oil field services people into our portfolio companies away from that world. So just want to put it out there as if folks have connections in that world or interest in it, would love to chat because I've been spending a lot more time there lately. But oh yeah, happy to chat with anybody about investing in the fund too. I think this is it's like I said, an unbelievable time to be doing hard tech things that it's hard not to get really excited.
Yeah, super cool. Well, I really appreciate you being here.
Yeah, thank you guys.
Yeah, thank you all. And once again, I'm Shelley. I work with the relationship management team at Mercury. We have so many exciting clients who are emerging fund managers, who are founders, who are doing really incredible things. And it's my pleasure to be able to connect them to opportunities within the family office and LP community. And it's a huge goal for me and for Arthur to continue this work and to just increase the opportunities that we have to bring everyone here in contact. So more opportunities to come. And as always, happy to answer questions about this program or anything else that we're up to.
Super great. Yeah, we'll make sure everybody gets in touch with each other. And even though we've only done, 2 or 3 of these with Mercury, the feedback from the community has been awesome. So super grateful. And I'm sure we can expect for this one. Thanks so much. And thank you, everybody, for being with us today and sharing with us the only thing you can't make more of, and that's your time. Till next time. Thanks, guys.
Thank you so much.